Hey guys, welcome back. I hope you had a really great day trading today. So today I did take a lot of red trades. I do much better when we do close within the implied move. And I did okay on IWM today, but mostly my trades were red today. I did not have the best day. And SPY did open with a gap up. It was a small gap up and we got above the 30-minute 200 moving average and then got pulled right back down. So if you look at just the moving averages, let's take the price out of it. We are still bearish here, and this was actually a really cool move because this 35 EMA today, we did see that bounce, but it got rejected at the 50-day moving average. So that's something you're not going to see unless you take price out once in a while. So we did get rejected. We are still bearish, and let's get price back in. So we did drop underneath the 50-day moving average. We did fill this gap right here. This is the down gap and up gap. Overlapping gaps tend to fill usually pretty quickly. We have one down here still. And so we dropped underneath that 50-day moving average, filled these two gaps, then we dropped down to the bottom of the implied move. So this is where I thought I actually had the day because we did initially come back up. But when that 35 EMA got rejected at the 50-day moving average, we ended up dropping outside of the implied move. We did have a red signal line all day from that very first candle, and that did play itself out today. So then SPX, we had the same thing over here. We opened with a small gap up. You could see that wick almost reached up to the 1 hour 200 moving average. And then from there, we dropped down. We got underneath the 30-minute 200 moving average. Then we had this level with the down gap, the up gap that filled. The 50-day moving average was right there. And you could see these long wicks. You could tell that we were trying to get back into the trading range. This 35 EMA pushed us back down. It curled away from the 30-minute 200 moving average. So here too, if you take price out, you could see that we are still bearish. As long as this 35 EMA is trading underneath the 30-minute 200 moving average, we are bearish. So even with these swings up, and I do believe we got above the 30-minute 200 moving average with price, we did because we almost hit that 1 hour, but the 35 EMA was still underneath the 30-minute 200 moving average, and it got rejected just a little bit above the 50-day moving average and in these two gaps. So interesting thing to watch. It's a different way to track things, but it does play out more often than you might realize. So we did have a red signal line all day from the very first candle, and then we did, after filling this gap, breaking the 50-day moving average, we took it all the way down to the bottom of the trading range, and then here is where we did get that oversold signal. I did think I was so smart when I took this trade and we came back up, but then that 35 EMA pushed us back out and we dropped outside of the trading range for the day. So SPY down 1.13%, SPX down 1.11%. VIX has already moved over to the next day. And since I started doing these videos early in the morning instead of late at night, VIX has already moved on. But VIX did close up just a little bit over 11% yesterday. So nice pop in VIX. That should give us a nice expanded trading range today. And we did not close within the implied move in either one. And QQQ, we had a very similar move to open. We opened above the 30-minute 200 moving average right here. And then we dropped. We broke that level. We came down to fill this island gap. That's this down gap and this up gap. And in that gap, we found the 35 EMA, and that became our resistance into the rest of the day. So we dropped underneath that. You could see that third candle completely underneath the 35 EMA, which is that red line. And then from there, that was our resistance. We did get pushed out. Red signal line from the very first candle. Actually, right here, it was just crossing over, but that second candle gave us a red signal line, and down at the very end of the day is when we finally got an oversold signal. So this would probably have been a really great place to maybe sell spreads for the next day. maybe underneath this 50-day moving average. So QQQ closed down 1.78%, big down day, and VXN did close up 9.11%. So nice pop in VXN, and we did close just above that 50-day moving average. And you could see that 50-day moving average is sitting right on top of this up gap from last Friday. And IWM did close within the implied move. We did open with a gap up to the 30-minute 200 moving average, and just like the rest, we got rejected at that level. And zooming out, let's take price out. You can see we are still bearish. We are trading the 35 EMA underneath the 30-minute 200 moving average. And you'll see the difference when this 35 EMA does get back above. We will start a new uptrend, but right now we are bearish. And as long as this 35 EMA is underneath the 30-minute 200 moving average, this 30-minute 200 MA is going to act as a resistance. And it did that today. So let's get price back in. And once we got up to that 30-minute 200 moving average, 35 EMA underneath it, we got rejected down, and we took it all the way to the bottom of the implied move, which was 222. And from there, that was where we pretty much saw the low of the day. We did hit 222 again, but we did end up closing above that 222.72. So if you did sell 222, 221 bull put spreads, we did close above that, and that would have paid. We did get an oversold signal in that second to last candle, and then we did pop back in to close within the implied move. And IWM down 0.8%, and RVX did close up 3.73%. And lastly, we have DIA. DIA opened with a gap up above the 35 EMA and underneath the 30-minute 200 moving average, which was resistance on Monday. And we saw that gap up with a red signal line down here. So you could see, if you were reading down here, this pop up did not take us above this signal line. So that brought us back down underneath the 35 EMA, and we did close down. So we are down on the week in all 5 of them. So DIA closed down 0.42%. and we stayed within the implied move today. So interesting day, interesting start to the week, interesting start to the year. Let me know how you guys did in the comments, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. And if you want to support more content like this, consider tapping that thank you button. And another way to help this channel grow is to share this video with your favorite trader. Alright, so starting in SPY, the implied move for today is between 584 and 594, and that is from options, the 30-day average volatility, and the next day's implied move. So for Thursday is 583 to 595. Today we do have the Fed minutes. I believe that is at 2 p.m. today, so just be aware of that. And to the upside, we do have the 35 EMA. That's coming down in the upper part of the trading range after being rejected at the 50-day moving average yesterday. And that 50-day moving average is also right at the top of the implied move. It's a little bit hard to see. It is 594. And we also have that 30-minute 200 moving average. So I'm going to take price out here for just a second, and just like this 35 EMA, we saw resistance here at the 50-day moving average. We have this 30-minute 200 moving average coming down, and we could find support here on the 50-day moving average. So that is an important level to watch today. It's not quite in our trading range, but as the day starts, if it comes down, right when we get to here is going to be a critical level, and it could bounce back up. That could change things here for us, or it could break down, but definitely an interesting and important level to watch. It will give clues onto what the next moves are. So the top of the trading range has a lot of conflicting momentum here, and then to the downside we do have this up gap from last Friday. This was the last week of 2024, first week of 2025, and we gapped down underneath the 50-day moving average, and at the very end of that week we gapped up. That gap is in the bottom of our trading range. We did have a previous support level at 585, and that is where the bottom of the gap is. So truly a wild trading range here. It's not a beginner trading range, and because we have Fed minutes, if you're not that advanced yet, this might be a day to sit out, but I'm not going to tell you what to do. And 584 is the bottom of the implied move, 583 on Thursday's contract, and then underneath all of that, I do want to draw attention to the overlapping gaps. We have this down gap and this up gap. They will always fill. I cannot tell you when, but they will eventually fill. So this is the election gap, and then the gap that we had a little bit before the election. The down gap here, up gap here, and we have been chipping into it, but we do have where they do overlap left. And 4-hour 200 moving average is there as well, which could give us a technical bounce before actually filling this. So that is SPY, pretty intense. Just a reminder that we do have a red signal line right now, and SPX implied move over here is between 58.60 and 59.60. That is from options. The 30-day average volatility and the next day's implied move, 58.55, 59.65. And this is just a $5 difference here. And I personally like a $10 spread in SPX, so I would likely look to 565, 59.65, 59.75. And to the upside, we have the same setup here. We have the 35 EMA. We did see that 35 EMA get rejected out right around these two gaps right here, and it did come back down underneath the 50-day moving average. So 35 EMA is currently resistance. Above that, we do have that 50-day moving average that is just underneath the top of the implied move. The 30-minute 200 moving average, 59.60 is the top of the implied move, and 59.65 top of the implied move on Thursday. Both of those are just above that 50-day moving average. And if both of these strikes do turn out to be sell levels, then that 50-day moving average will also turn into a resistance, which personally is what I'm counting on. And then underneath us, we do have this up gap from last week. That was the up gap right before Friday's trading day. The bottom of that gap is a previous support level, so that is at 58.65, and we did have support there quite a bit. It was originally right where the top of that election gap was, so we did have support here at that level, and before that it was a resistance. It's right about where we had previous all-time highs before the election. So that is a support that we have at the bottom of the implied move. The bottom of the implied move is just a little bit lower, 58.60, 58.55 on Thursday's contract. We also have the two overlapping gaps here, which will fill. We don't know when, but it'll fill eventually. And then 4-hour 200 moving average. We also have a red signal line here. Red signal line, but also we have hit oversold. And QQQ, the implied move over here today is between 509 and 521, and that is from options. 30-day average volatility is a little bit wider. It is 508 to the downside and 523. And Thursday's contract is between 508 and 523. And look at all of this conflicting momentum. To the upside, we have the 35 EMA. That should always be the first level to look for. Right now, it is resistance. You can see that long wick a little bit more clearly now that the trading range is shifted over, but we did come back up, and that 35 EMA was right there, and you can very clearly see that as a resistance. So 35 EMA, first level to look for. 1 hour 200 moving average is pointing up, and it is at the very top of the implied move at 521. But then we have the 30-minute 200 moving average coming down, and that is just a little bit above the next day's implied move at 522. To the downside, and right now we do have red futures, so this is likely one of the first levels we will encounter today. It's the 50-day moving average. That is a huge level. We do see technical bounces on it all the time, and if we do break it, that is a big deal. So the next level to look for if we break it is down here. This is the bottom of the up gap from last Friday. The bottom of that gap is at 510. 509 is the bottom of the implied move. 508 on Thursday's contract. We do have a red signal line and an initial oversold signal. It does not mean that we can't see more oversold. Here we had an initial oversold signal and then we dropped a lot. So it is an oversold signal, which means that 50-day moving average definitely has possibility to be support, but it does not have to. In fact, we started the year and ended the year last year underneath the 50-day moving average, and that in itself is a huge sign. So that is QQQ and IWM. The implied move today is between 220 and 226. That is from options. 30-day average volatility 218 to 228, and Thursday's contract 219 to 226. And to the upside, we have two downward facing moving averages, 35 EMA, 30-minute 200 moving average, and this is trading bearishly right now. So 35 EMA, we're in a bearish downtrend until this 35 EMA crosses above the 30-minute 200 moving average again. As of right now, we did see a rejection and a curling away from the 30-minute 200 moving average. So we're still bearish and potentially looking lower. If we do get above those two moving averages, 226 is the top of the implied move. 226 also is the top of Thursday's implied move. Rounded up, they just both get to 226. And right now, futures are down. In pre-market, we're down 0.64%. So that actually takes us to the downside. Pre-market takes us right to where we saw support yesterday and right above this up gap from last Friday. Bottom of that gap is 221. 220 is the bottom of the implied move. 219 on Thursday's contract, and the bottom of the trading range, we do have a previous support level. So 218 is where we did bounce at the very end of last year. This is December 30th, and that gave us a run back up to the 30-minute 200 moving average before getting pushed back down. So 218 is previous support. And then we have DIA. We have an implied move over here on the day, 420 to 430. The weekly implied move, 421 to 433. So if we get underneath 421, this is going to be oversold, even though we do have an initial oversold signal here. And then we have the 35 EMA above us right here, and we have been chopping around that level lately. Above that, 30-minute 200 moving average, and then the top of the implied move on the day is 430. Very top of the trading range, or the implied move on the week, I should say, we do have resistance right here. So 433 a resistance. We do have another resistance right here. So just above that 430, we have resistance. And 50-day moving average has flatlined. And above that, 1 hour 200 moving average is pointing down as well. So we are definitely bearish in DIA. And there you have it, guys. Have fun, trade safe. Make sure you take profits when you're up, and I'll see you guys tonight.